All right, welcome to the weekly outlook. It is August 4th, 2024, and the markets are bleeding everywhere. This does not look good. We got weekly bearish crosses on the 821 EMAs, which is our main indicator that we use, and I'll show you that here in just a little bit. But before I do that, please hit that like button and subscribe if you'd like to see future videos like this. There's Discord links down there in the description as well if you'd like to join the Discord. But other than that, let's get into it. So we had this bear mode line and this bull mode line that we've been watching for a long time. And I think I started drawing these like way back here. And I said I didn't really think we were going to have the main stage of the bull market until we crossed this 71,320 barrier. I also said that if we break down below the bear mode barrier, then we can see significant downside, and you can see that we've kind of been oscillating around that for a while, and now we've broken down below our support at the 886 at 58k and opening the new week going down further. If we look at total market cap, we now have a weekly bearish cross on the overall market. Now, does that mean that we are absolutely bearish right now? No, not yet. Why? Because this candle can still shoot straight back up and get bullish again. Like, this is not confirmed bearish yet until this weekly candle that we currently just opened closes and confirms that cross. I hope that makes sense. If this candle does start bouncing this week, you will see that when it gets, even a little bit higher, that those will uncross. And so these two moving averages on the current candle are fluid. They move. They will move as the price changes because it's taking the average, including this current candle. So I'm not calling it completely bearish yet. However, we are very close to it. This is the biggest red candle that the crypto market cap has put in since, let's go see how far back we have to go to get a candle that size, and it would have to be that one, right, which was the bottom of our bear market. So it's not great, right? It does not look good. The next level that we have is this 0.668 here at 1.92 trillion. We're currently sitting around the 2 trillion mark, which is kind of a psychological level. So we'll see if we get some movement back to the upside. There are cases that suggest that we could move back up, and there are cases that suggest that we are going to just continue plummeting down into oblivion. Let's start with the dollar, for example. This is moving down very rapidly with equities, right? Generally, what we want to see is the opposite, right? We want to see equities going up and the dollar going down, or the dollar going up and equities going down. In this case, that's not happening. Everything is falling, everything. And that is typical of a change in market structure. Something's happening, and we need to pay attention. We don't want to see everything falling, right? And the reason that's happening, a lot of people are going to mention that it's because of a recession possibly showing its head at the moment. And while that's probably true, and I do think that there's going to be a recession here in the next year, 2 years, I think that it's not going to be as easy as that sounds, right? Like, I don't think that you can just jump into shorts right now on equities and do well, right? Reason being, the weeklies are still bullish here on the S&P and on the NASDAQ. They haven't crossed bearish yet. Doesn't mean they're going to not, fall and cross bearish, but typically when they're bullish, you don't want to do that. And here's a prime example here. Here's a prime example here. So you want to wait till you actually get that cross and then a retest, and then you want to short that retest. You don't want to short the big red candle that is very far away from the moving averages. Things like to revert back to the mean, right? So here, kind of another example, like we're well below. This is a big move down, and there's going to be a relief bounce eventually, and it's likely going to be right when you want to start shorting the market. So just be wary of that. The best thing to do in most cases is to do nothing, right? If you think about long-term investing, we're buying things and then we hold them for a really long time, and then at some point we decide to sell. There's only two actions happening there over a very long period of time. Now, if you're short-term trading, good luck. Like, this is going to be hard to do. Short-term trading over the last couple months really has been very difficult, especially with crypto. I mean, look at this just sideways price action, right? Now, let's go for the bull case first, right? Bull case, this is a massive bull flag. We can, draw this back wherever, and you can see this flag shape, and that's a terrible trend line. But here's our resistance, and it got the same kind of trend coming down here. Huge pole flag. That's the bull case. This is a giant bull flag, and we bust up out of here eventually, right? Looking at this Bitcoin chart, you can see we haven't crossed bearish on here yet either, right? So Bitcoin is still technically bullish because the EMAs have not crossed. When we look at total market cap, they have, but that's because altcoins have been doing significantly worse compared to Bitcoin. And that is due to Bitcoin's dominance, right? We're actually tapping that downtrend very close to it, almost touched it, that I mentioned last week. And by the way, if you want to see these weekly videos every single week, you got to get in the Discord and click that link in the description. But I do this first of the month live to everyone. So Bitcoin dominance is still rising. Ethereum dominance is still falling, puking. If we compare Ethereum to Bitcoin, it looks very likely we're going to head down to this trend line / weekly pivot around, now it adjusted, 0.043. Also notice that trend line's pretty nicely lined up with that scenario. Last week we came back up and tested that 0.5 area again and rejected. And you notice these EMAs are bearish, right? And that rejection, that retest, those are the places you want to try to sell. Like if you're trying to get out of this market, then the best way to do it is to wait for a retest after the bearish cross, because that's going to give you the best entry or exit. Sometimes it's not fun, but that's kind of the best way to do it. So for example, let's say we are crossing bearish here, right? Do I want to sell way down here? No, I would much rather sell closer to the EMAs. And if you look at history, price always comes back to them, right? Like I don't want to buy way up here, just like I don't want to sell way down here. Does that make sense? So like I said, the best thing to do in most situations, especially ones like this, is to just give it a little bit of time. Don't panic like most of the market is doing just yet. This could still recover and you just sold the bottom. That's totally possible. And here's the flag I'm talking about. This is total market cap. This is a giant bull flag, right? Now, why are we having so much sell pressure if this is indeed supposed to be a bull market that heads us up into some crazy new all-time highs? Well, because we didn't get the golden pocket sell-off, and I've been mentioning this pretty much every week now since we've been pulling back. We didn't get that golden pocket sell-off like we normally do, right? It just kept going higher. And so now we're getting that retracement up in the greed FOMO zone, which is between the 786 and the 886. So it makes sense, but it means that we might be in for some not so great times, right? I mean, we can see significant falls from the golden pocket, and you can come back and look at previous history to see what that might look like. Like this is very volatile, right? So if you just take this from the top to the bottom, you can see the golden pocket sell-off, and COVID brought it even lower, right? So let's say COVID didn't happen, we still would have came down to here, which is, overall a 56% drop in the whole market. I mean, that's a lot. Let's go measure what we have now. Like so far, we're not even close to that. Like it could be way worse. I feel like we're spoiled at the moment and everyone's freaking out. So if we take from the very tippy top to the low, that's only 30%, right? If we matched last cycle's, pullback, 56% would take us even well below this 0.5. Like, so we'd be down taking out these lows here just to get an equal representation of the pullback we got last cycle, right? Not including COVID, right? COVID made it even worse. So, and you can see this is what needed to happen for us to actually start going higher. But we didn't get that sell-off here. We're getting it up here now. I hope that makes sense. So while I think that it could get a lot worse, even if we get a weekly bearish cross, it doesn't mean that it's the end of the bull market, because we can see these bearish crosses happening on the weekly and then recover and then another one and then recover. a couple times before we get the actual main stage bull market. And here we've only had one cross bearish, one cross bullish so far. And now we might have our second one. Previous cycles have had 2 to 3 to 4. So right now we're on, if you count that one, 1, 2, this would be the third. So it could totally come back down here to this 0.5, around 1.5 trillion, find support, and then start heading higher again. And that would be totally normal. Does that mean I'm still going to sell on a weekly bearish cross? Yes, I'm still going to sell, because I would much rather sell here and then rebuy down here on some fib support later on. At least then I'd have a better entry. I can take profits from our positions way down at the lows, be happy with those profits, and then hopefully get a better entry lower and maybe scalp some shorts in the meantime. But right now, I still don't think I'm going to do anything this week. I'm going to wait and see. If we close a candle below this 0.68, which is at 1.92 trillion, if that candle closes below and breaks our flag, then yes, I will sell, because that means this will definitely be cross bearish, and then we'll probably get a pop back up to retest those EMAs at some point. I don't know when that'll be, but when you have this huge price action like this, it can move just as fast as this did to the downside, right? And that's what we don't want to get caught in, right? So I would much rather just take my profits here and wait for some lower prices maybe to average back in. Looking at total 2, this is already falling down below the 0.5. So we have R1 support here on the weekly, which is just a little bit lower. You can see that shelf here, but also notice how fast price can move here. Like, that's scary, right? It can move just as fast down as it can up in these zones where price moves very quickly. So don't think that just because we've already moved down so much that it can't go further, right? Because it can. This is crypto. This shit's crazy. Like, you don't want to be buying these dips for one. Like, if there's one piece of advice I can give you, is you don't buy dips after a bearish cross. You just don't do it. It's not a good idea, because this is what happens. Here's your bearish cross, and everyone's buying all these dips, and everybody's like, oh, it can't go any further than that, and then it just keeps going, right? So when you have bearish EMAs on the weekly, you don't buy dips. You wait. Okay. I hope I've made that clear, and I hope that that's going to save some people money. Now, if we look at equities, we're opening up below the EMAs. This is not great either, right? So we have everything's falling. Everybody's freaking out. Futures markets are freaking out. We broke this rising wedge. This is a bearish pattern as well. We noticed that a couple weeks ago, and we continued falling further. I was able to get some nice puts on SPY last week. My little short-term scalping portfolio did pretty well. I didn't really touch anything else as far as long-term. I'm still long-term, right? We could see as low as this white trend line, the R2. The white trend line, by the way, is like the all-time trend line that I have on this chart. At all times, it goes back like a really long ways. And basically, that white trend line is like, okay, if we ever fall below that, that's where I want to be buying, like as much as I possibly can. And so that's what I do. Whenever we're below that white line, I'm dollar cost averaging into stocks that I'm holding on for, decades. And we did that down here a few years ago. So this is breaking a bearish pattern. NQ broke below the main support, which was where I wanted to see it hold, and it didn't. And so now we can come down to the bottom of the channel, right? So let me get that out of the way. NASDAQ now is clear to come down to the R1, bottom of channel. You can see this channel has been going on for quite a while. That's where I might, try for some longs. I did grab a SPY call at the end of Friday, but I'm going to be selling that as soon as market opens tomorrow because I don't trust this. So I'll take a little loss on that, no big deal. It was worth a shot from Friday to Monday, in my opinion, because we were hitting that 21 EMA. And who knows, maybe futures pop up overnight, and I'll be happy. I don't know. Futures can be wonky like that. The Bitcoin CME is very interesting. So we have this huge gap that was left here from July 12th to July 15th. And then we proceeded upwards, rejected our previous all-time high once again, fell back down and closed here on Friday, and now opened up like in the bottom of the gap. So this gap is now really big. Like this whole thing is the gap now. Whether or not it wants to fill it this week, I don't know. It very well could. Gaps like to fill. So we could see upwards of that 62K mark, which is that big area I talk about. It's the 1.618 of the previous cycle. And so whenever we're above the 1.618, I'm like, okay, we're bullish. If we're below the 1.618, I'm like, okay, we're bearish. And we've just been chopping around that line for months. So it's not fun short-term trading. Long term, I'd really like to see it get back above that 62K mark to be more confident in the market. Until then, I'm waiting to see if I'm going to be selling this week. And that's basically the gist of what I'm going to be looking for. Ethereum's got a huge gap too, and it's big, right? Like that's, let's see the percentage on this from bottom to top. That's 8%. That's a big chunk. So if this area here at the 618 does not hold, we could see as low as 2200 again. If 2200 breaks, then this is over. Like we're done, right? You can see the dailies hitting oversold. So I don't really think that we can continue too much lower. I do think that we might get a nice bounce this week, but then again, it's crypto and everyone's panicking. And if this dollar was moving upwards while everything was falling, I might have a little more confidence in that. But with everything tanking like this, you just got to be really careful. It's just not like the Dow Jones even puked after hitting the 1.414 again, and now we're sitting on top of support, but it's not looking good. Like nothing really looks appetizing. So again, don't buy falling knives. Let's see. So Ethereum can see as low as 24.53 this week. Could see as high as 3K again because that's the retest of the 8 EMA after the bearish cross. And so if I see that retest, I might just go ahead and get out and wait. And if we get a bullish cross again, cool, I'll hop back in. But until then, I'm going to be waiting. I hope that explains it. If anybody has any questions about any of this, please feel free to ask. I want to make sure that everybody's prepared this week for what might happen. I don't want to see anybody, get, ripped apart. And that's why I keep stressing don't buy these dips because you don't buy them in bearish markets. And right now we're kind of teetering right on that bearish market. So feel free to drop your questions. Feel free to drop your chart requests and I can take a look at it for you. I'm assuming every single altcoin in the market is bearish right now. I don't think there's anything that looks good at the moment. Let's go look at cost because it's been like the strongest. And it's not bearish, so that's great, but it did close a candle below the 8 EMA, it looks like. Yeah, just barely. So we closed the weekly below the 8. Now we can see as low as, a little bit, like 15 cents-ish. And again, this is very divergent the whole time. Kind of a rising wedge looking pattern. So let's see if anybody's got any questions. Yeah, this is still falling. It's really ugly. Thanks for being the voice of reason, sir. Appreciate it. No problem. This is what I like to do. Whether I can help make you money in a bull market or help save you money in a bear market, that is what I'm here for. Sheamus is typing. We'll see what he's got to say. Sol. Yeah, so let's see what that looks like on the weekly. So we've had a couple of these now, but if you remember me saying that this 151 mark is really important, it is, and we're bearish if we're below it, and we're bullish if we're above it. You can also see that the weekly candle started above both EMAs and closed below both EMAs, so that is a big bearish move, and I wouldn't really be happy with Sol unless we tapped 123 again to take a shot at moving back up with tight stop losses just underneath here because this space is wide open. So if we break that 786, this is like mega short down to the 7-1, and that would be my first short target if I'm honest. Like if I was going to short something, I think Sol would be the juiciest because it's been so bullish, and when it finally goes bearish, I think it's going to really tank. I do think the inflation on Sol is pretty insane as well. Last I looked, like they're printing a lot of tokens still. So as soon as you get below 123 to 117, like this little area here where you can see it keeps wicking, once that breaks, then short from there to 94 to 89.90 would be a great return. But again, you want to wait. If you think we're bearish, then you want to at least wait for a daily retest. And it looks like that might happen where this 8 EMA is rolling down right at that 151 mark I mentioned. And so if we do get a big bounce up, that would be the short entry with your stops just above pivot at 162. And with Sol, you have to have like really loose stops. Like this thing can move 10% a day. So you can't be using super high leverage with that. Like you'll get wrecked. Unless you get lucky, I suppose. USDT. Did I not cover that? I didn't. Okay, so we closed above that 0.5 mark. I'm glad you asked because I forgot to mention USDT. So we closed above it just barely. You can see that candle. And now we opened up the new candle and we're just heading skyward, right? So that's not great. It doesn't look good. Until we go back below that 0.5, you could use that as your metric if you want. You know, if USDT dominance falls back below 5.68 and closes at least a daily candle back below, then maybe we can try to long the market down to the pivot again where these EMAs are. That would, you know, could be a good method to try. Right now it looks like we're heading for the golden pocket. So that's usually where we go after a 0.5 break. So that's still quite a ways away. BNB. Let's go back here. Sheesh. Okay, so we had a nice bullish flag. We had a huge move out of that, and then since then it's been nothing but selling. Fell back below that downtrend, and now we're heading lower. So here's what you want to do, and I'll use BNB as an example. If you're looking for like retracements that could go deeper, and you're looking for like a position to buy, right? So you can see that's a bearish candle through both EMAs. So now that we have a top, right? Like we can say this is a local top, if anything. Hopefully it's not the macro top, but it very well could be. We don't know yet. But you would take the bottom to the top to get your fibs, right? And so your next DCA spot would be the 382 here. Because in order for this to be a strong trend, it has to bounce on the 382 or the 236. Well, we've already broken below the 236. So we need to see this hold at the 382. If the 382 fails, then that 0.5 is, you can count on it, right? So you want to try this at the 382, keep a tight stop loss just underneath, and you can use previous candles as your stops. So maybe the top of that weekly high right there. So you can just draw yourself a little line, just like that. You can set an alert. You can throw your pivots on. Well, look at that. You got an R3 right there. So that's a great stop loss, right? Because you got that weekly close or that weekly high. The pivot's just above it, so that would be a good stop. Your entry would want to be close to that 382. So you can go ahead and measure this now to see if this is a good trade. And this is what I do to analyze whether or not a trade is a good R&R. So I'll say, okay, let's say I do enter there and my stop loss is here. Okay, well that's a 3.4% loss, let's say, with fees, right? So the most, if my rule is like I don't want to lose more than 15, 20% on any given leverage trade, right? Well, then that means the most I can use leverage-wise is 5 times here, because 5 times 4%, that's 20%. So if I'm using 5 times leverage, then I want to find my take profit, right? Assuming that that's where I'm entering, is in this zone with my stop loss here, then I would now measure this downtrend from the top to where I'm entering and say, okay, my first take profit is going to be that 236 at the very least, right? So then I would measure from my entry to that 236, and that's 12%. So now we have a 3-to-1 risk to reward. That's great. I will take that trade all day long, right? Because I'm going to risk 4% to make 12% on 5 times leverage. That's 60%, 20% to 60%. And so that's how I determine whether or not it's worth it or not. But it's not worth it unless it hits my spot, right? Like that's where I want to enter. And I'm not going to try to enter any sooner. And I'm going to keep my stop loss here no matter what happens. And then as it moves higher, I can now move my stop to entry, right? And now I'm risk free. I can set my take profits. I can sleep well at night. And that's how I trade. But I'm not going to trade it unless it hits there. So I'll set an alert like right here and say, okay, ping me when the price hits there. And now I don't have to stare at the chart. I can just wait for a ping. And I already know what I'm going to do with BNB. Should that alert go off, I'll just go right into my phone, place the trade, set my stops, set my take profits, and then walk away. And that's the best way that I've learned to like stay healthy trading, because if I'm just sitting here staring at charts all day long, I drive myself insane. I ignore my family. I get fat because I'm not moving around. I'm able to trade this way and go to the beach if I want to, right? So that's how I want to live, and I suggest everybody get into some sort of routine in this regard when you're trading, because it's just the happiest way to be. But that's not a great candle, right? So if anything, I'm going to take that bounce, I'm going to take my profits, and I'm going to get out. I'm not going to sit here and try to like long that forever, because that's not looking good, right? Okay, let's look at Matic. I hope I didn't ramble on too long there. Matic. Yep, that's horrendous. It broke down below the triangle. So first close below that line, and now it looks like we're heading for the S2. So here you could take a short if you want with a stop loss just above that line, and try to aim for 34, 35 cents. Let's see what this fib looks like. It's just a big freaking flag pennant. You'd have to go from here to here. Oh, look at that confluence right there, though. Yeah, I mean that's your like historical support is right down there at 35 cents. I would say that there's like an 80% chance that's where Matic's going. Yeah. Okay, Nvidia. That's going to be way down here. Okay, so there's our historic top. We overshot it a little bit, but then fell back down. So it looks like we're coming for our historic bottom next, potentially. And we're in between the EMAs on the weekly. Daily's pretty bearish. I would assume with the current gap down, if the market opens like this tomorrow, then Nvidia's probably going to go with it. And 97, just under $100 is the support. And if that fails, then this is like hella short, because this is like a really big rising wedge kind of pattern going on. So you see how divergent that is too? Look at that downtrend on the RSI and the uptrend here. It didn't do it on the MACD, but yeah, the weekly is definitely divergent on the RSI too, but the MACD is not. So that's what made things harder this pullback, because they're not all doing it. Usually you'd have both the MACD and the RSI being divergent. So and like ES is divergent, but NQ is not. You know, like this is definitely higher than here. So it made it tough to see this local top. And I don't know if it's done, because like equities can be divergent for a really long time bearishly and continue higher. Like you can see how divergent all of this is, and for how long this trended up while this trended down, and then it finally fell. So equities is like a different animal with divergence, whereas like if you see divergence on Bitcoin on the weekly, then yeah, you can say, okay, we're getting out. But I don't see divergence on the weekly here for Bitcoin. Like this is trending down, this is trending down. It's not like this was back here. And let me get this so you can see it. Right, like that's trending down, this is trending up. So that was obvious, right? And then the bottom was obvious too, because this is trending up here while that's trending down, right? So that's your bullish divergence, but I don't see that happening yet, which is what makes me think that this, just because we're falling right now, it doesn't mean that I think this bull market is over. I think the cycle and the timing, we're not there yet. I just think we need, the big move down before the rip. And, I think 50K is going to be where that eventually takes us. So, at the least. And that would even only be, let's see, even at 50K, that's only 30% from the high. And previous cycles went well below that. So, yeah, man, it's just going to keep going. Like, people are still buying dips, and that's not a good idea right now. So I hope I've saved some money here, at the very least. And we just wait. We're just going to wait. ETH broke below the 618 now. It doesn't even care about the cap. It's just like, whatever. We're just going to keep going lower. We're already hitting where I thought we would go. So we'll see if we fall below that. If that breaks, then we're headed down here. Like, look how wide, this is wide open down here. So we could wick down into that. I haven't seen any sort of like liquidation flash crash situation happening yet. And typically the way the markets have been over the last week, that's what's going to happen. Like, we're going to get one of those huge pukes down and liquidate a whole bunch of people. And then you'll see a bunch of crazy price action in like a 5-minute candle. And then, hopefully it'll eventually recover. But at the moment, it doesn't look great. Let's do this. Let's draw our overall uptrend because we haven't done that in a while. So let's just erase everything. Get rid of these pivots on Ethereum and draw this because this is what matters now. Okay, so 2274 would be the sign of a strong trend. That's where we would need to hold in order for this trend to be maintained. If we break the 382, then the trend is broken, right? So we can fall all the way down here and still be in an uptrend, right? So like, not time to completely panic, but it looks like we're gonna go lower. If we do the same thing with Bitcoin, and I'll do this with you all live, so that way when I start sharing charts again later. So what I like to do is mark the important spots before I erase my fibs, right? So 58,186 and 50,106. So I'll keep those by just doing that, and 50,106.94. Okay, and then we'll do another one, and we'll label that one 58,186.43. And now I know where, and I'll make them blue, so that way I know that that's my greed FOMO zone, and then I'll erase my fibs. And now I know where those are. And then I'll draw my uptrend. Come on, magnet. There we go. So, I mean, Bitcoin hasn't even hit the 236 yet on the main trend. So 50K looks like that mark. So we could actually fall as far as 40K and still be in a strong trend. As crazy as that sounds, that is what's possible, because here's our trend. And our trend isn't broken unless the 382 is broken, right? So a lot of people are like, trend lines don't really work. They're kind of subjective, and I agree. I think trend lines are very subjective, right? Like, depending on where I put these points, that determines my trend, right? So if I put them here, like that, then my trend broke a long time ago, right? Like, so what matters is the 382. That's why fibs are important. And that's why I think it's important to learn fibs, because you don't even need a trend line. If your 382 breaks, your trend is broken. And I show this to numerous people who take my one-on-one sessions on how you can determine that really well. So just draw your fibs, make sure you're in log mode on the high time frames, and see where that 382 is on your overall trend. If the 382 broke, then your trend is broken. And what needs to happen is consolidation on a fib below before you can get a new trend. Or it's just downtrending, and that's as simple as that. Okay, if anybody else has any questions, going once, going twice. Be careful out there this week. It's not looking good. Do not buy falling knives. You will get hurt. And wait for recovery, or wait to short. Hope that helps. shoot any questions you have in the chat, and I will answer them as well. And good luck to everyone this week. Have a good one. Bye.